Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, we capped out the week with some gains, and actually as Donald Trump took office and took the oath here, we saw some volatility coming into the market, but by the end of the day on Friday, we actually saw some nice gains. We had the Dow posting up almost into triple-digit territory here. The S&Ps closing up almost 8 points, Nasdaq up 15, and the Russell up 6. We had the crude catch a slight bid. Gold actually starting to move higher, pressuring the 1210s there, and the bonds pretty much unchanged on the day. So we'll see all of this on the charts. But as always, we're starting off our analysis here with the S&P 500 dailies. So as we take a look at the charts here, still no resolution. It definitely seemed like going into the inauguration, the couple of hours leading up into that, the market was open. It definitely felt more like a Fed rate announcement day. The trade was very slow, very lethargic, and actually right after the inauguration took place, we did see some intraday volatility here, but we did manage to close in the green for the day. And we still see, if you look at a 60-minute chart here, you still see that we're still in range of being able to break out of those 2280s. And folks, that's really what we need, is some kind of clarity in terms of direction. As I've been mentioning for quite some time, I feel like there's a bit of a balance forming here in between the 2230s and the 2280s. You need to get some kind of directional bias, either breaking out or breaking down underneath those levels. One of the things that I think that could be like an early tell if the market is maybe starting to roll over or maybe just needing a little bit more time is I'm seeing a bit of like a trend line starting to form here. And so if, over the next several days of trading, Monday, Tuesday, Wednesday coming forward, if you start to break down below these levels, and probably, I would look at these 2260s again. If you start getting down below that, you would be undercutting some prior lows, and that could be a cause for a bit more of a pullback, maybe a retest of those 2230s. So kind of watch those areas. 2280s up above. Real short term, we've got this little ascending trend line down below us, and then the 2230s. As we move over to the Nasdaqs here, taking a look at the Nasdaq, kind of the same deal, right? No real change here. We're still looking to try and break up and over these prior highs. Basically, kind of just putting in a bit of a wedge or a bit of a balance here, looking to break out. As we take a look at the as the Nasdaq, though, again, that relative strength is prominent. We're still looking to maybe tag that 5,600 whole number. And most importantly is, folks, we've got all of the big cap techs on deck for earnings. So the Amazons, the Facebooks, the Apples, all going to be reporting within the next week and a half, 2 weeks. And really, when you start to look at these stocks, folks, they're starting to look pretty good from a chart pattern standpoint. Now, let's remember that the chart pattern itself might look good, but either way, you can't take a position into earnings because the news will trump the analysis. So if for some reason, we come into an area here where the numbers don't come in with expectations, you could see a stock, gapping down 20% or 15%. And really, you just have to wait and see how these stocks behave post earnings. And as I've been mentioning here, don't be afraid of a stock just because it gapped up and it broke out. Like, for example, like a lot of people in our chat room or our trading room here, we're talking about the Netflix here, and the Netflix gapped up on earnings, and a lot of people said, I wish I'd bought it before earnings. But folks, really the truth of the matter is it could have been up just as much as it was down. And what you got to look for here at this point, it really actually is starting to do it potentially, is just a few days of sideways action where you can connect up some highs. And then if it resumes the strength, remember that's what we want it to do, is resume the strength. That's where it could potentially give you another entry. So folks, don't try and play that game of jumping in ahead of the earnings, trying to predict which way the stock is going to go. At the end of the day, it could go either way, and you just don't want to get caught on the wrong side of things. You want to be able to protect your capital, protect your risk at all times. As we move over to the gold charts here, taking a look at the gold. We saw the gold catching a bit of a bid right at the 1200s. So folks, I'm kind of noticing this balance starting to build out, and basically it's up at the 1220s down to about the 1195s or so. I would expect this to bounce around in that for at least another week or so. That would actually make a nice little balance, and then any sort of break up and above would be a test of the 1250s or break down below, and basically it's a continuation of the downtrend we've been seeing in the gold. If we move to the bond charts here, you can see that the bonds have backed off a little bit, kind of in no man's land, right? Really no tell on this. this until you get up and over the 125s, or you get down below the 123s. And then the crude is the same thing here. Taking a look at the crude charts, right? Same thing, either up and over the 54s or down below the 51s. Really no tell at this point. It's just right in the middle of those two balancing areas. So folks, as we approach the post-Trump inauguration and we take a look at the markets, our game plan has not changed one bit. We're still going to be looking for the best relative strength stocks, breaking out of recognizable chart patterns with volume. Folks, there's a lot of setups coming out there, and just one point I wanted to make about the markets here. One point is that with the markets having gone sideways for about 5-6 weeks now, there's a lot of stocks that have formed bases during this period. That means there's going to be a lot of opportunities for breakouts. Keep your eyes peeled for any sort of high volume breakout. And folks, that's what we're going to be gunning for every single time. So other than that, have a great trading day ahead and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.